And we are live, ladies and gentlemen. Welcome to the Dylan Holy Experience, your midweek market recap. To be more specific, it is 6 p.m. Pacific Standard Time in California, 9 p.m. Eastern Standard Time on the East Coast. Happy daylight savings, everyone. Or I guess we're out of daylight savings. Hold on, are we out of daylight savings now? Let me take a look here. Are we out of daylight savings? Let's take a little gander here, because now we're back to standard. It was previously like Pacific Daylight Time. I did the PST because I think it looks better than PDT, but that's just a style preference. But daylight savings time. So are we on daylight savings? Chat, are we on daylight savings right now, or are we out of daylight savings? Because I know that like we spring forward and fall back, but I don't know if that moves us into daylight savings or not. Let's see. Daylight savings time ends on Sunday, November 5th. So, okay, we are in daylight savings right now. DST. Have you ever? Dude, that's crazy. Have you ever been in DST? No. So I guess we are in daylight savings time. All right. Boom. So, yes, 6 p.m., now 6:01 p.m. Pacific Standard Time, or 9 p.m. or 9:01 p.m. Eastern Standard Time on the East Coast. But we have a decent amount of news to talk about. Let's just get into what's going on with our indexes. U.S. stock futures ticked up Wednesday night after investor fears of a widespread banking crisis led to a volatile session. Dow Jones Industrial Average futures were up 9 points, or 0.03%. Meanwhile, S&P 500 futures rose 0.11%. And NASDAQ 100 futures climbed 0.35%. Ending the regular trading session, the Dow at one point fell 725 points before the end of the day, before ending the day down by 280.83 points. On the market moves on the Dylan Holy Experience at Real Dylan Holy. I guess we can pull that some bitch up right now. But for our market moves, I think we ended up having it come in. Let's take a little look here. We got to go back to oh my gosh, I'm spoiling the entire midweek market recap. Leak it out, baby. Leak it out. But yeah, so for the market moves for today, for March 15th, the Dow Jones dropped 279 points, and the S&P 500 dropped 0.69%. Very nice. Very nice, 0.69%. Hey, I'll take it, baby. I'll take it. But let's move on to some news that's been going on. We are going to talk about the bank failures. Yes, I know. Yes, I know that we want to talk about the bank failures. Let me just get through some stuff, and then we'll talk. How's that? Ryan Reynolds is going to have Mint Mobile, his cellular company that he owns. T-Mobile is going to buy it for $1.35 billion, baby. Dude, Ryan Reynolds in his King Big Stuntin' era. So the telecommunications giant T-Mobile announced it's buying the budget cell service provider Mint Mobile, best known for its ads with actor and part owner Ryan Reynolds. The cash and stock deal, which includes two other brands, is worth $1.35 billion. T-Mobile CEO Mike Seifert said Wednesday that the company would use its size and resources to supercharge Mint, which uses T-Mobile's wireless network and offers plans for as little as $15 per month. Over the long term, we'll also benefit from applying the marketing formula Mint has become famous for across more parts of T-Mobile, Seifert added. So they bought them for their marketing division. But let's take a little look at why this could be a little more advantageous for T-Mobile than it was prior. It's not just their marketing division, but Mint actually uses T-Mobile's network. Let's take a look at my source. Trust me, bro. Come on, man. Source, trust me, bro. Come on, baby. There we go. To supercharge Mint, which uses T-Mobile's wireless network and offers plans for as little as $15 a month. So, yeah, so Mint's customers are already basically using T-Mobile. I think T-Mobile just wants them under their wing, and then that way they can sell them more stuff. Because that's what it's about. It's just expanding their customer base. And Mint, Mint has Look at the brand equity, dude. Ryan Reynolds owns it. They have better ads than other cell providers. Like, we can give them that. Like, they have more interesting ads and more compelling advertisements and a better marketing team than I think what T-Mobile has now. So I think that that's a big asset that they really did get in this purchase, in this deal. And they also get to have more people directly on their network, not on a third party using their network. They just have T-Mobile customers now. So I don't know if they're going to get, if Mint Mobile is going to get sunset, or if Mint Mobile is still going to exist, but owned by T-Mobile, but still maybe get like the deprioritized service, or if T-Mobile ends up giving Mint Mobile prioritized service for its customers now, because like the prioritized service stuff is super interesting. So let's do prioritized service cellular. So basically how this works is, come on baby. Okay, so basically what prioritized service is there are like first-party cell networks. So Verizon, for instance, they are a first-party cell network. Like, they have the actual like lines and the actual cell reception. Or in this case, we take a look at T-Mobile. So T-Mobile, they have a priority network. They are on their own network. They lay their own lines. They've made the investment into their infrastructure. So their users, if they end up not throttling them based off of their service plans, but like their users get higher quality cell service and more priority on the cell network when they are loading a web page compared to, say, someone, at least as of right now, on Mint Mobile. Mint is a deprioritized cell network, and that's why it's pretty cheap. Like, there's also not a lot of overhead. It's an online only kind of cell service provider. They don't have any physical locations. They also have like brand equity. So like Ryan Reynolds he just acts in the ads because he owns the company, kind of thing. But they only have to, or they only, and this is from basically T-Mobile's end, they only are able to rent out a certain portion of their network, and then that's what they provide to Mint Mobile in terms of like bandwidth. So I do think it's interesting what's happening here, where they are purchasing like a secondary cell network, but it already uses their cell network. So I guess we'll see. But at least for Ryan Reynolds, he probably earned a fat bag on this one. So good on you, man. Congrats. I like Ryan Reynolds. It's nice seeing him succeed. I don't really give a shit what anyone says. Like, oh, he's sold out. He's part of the top 1% now. Cancel Ryan Reynolds. Are we canceling Ryan Reynolds? Let's just chill, all right? Good for Ryan Reynolds. And we'll see what happens with this T-Mobile and Mint Mobile deal. And we'll be covering first and only on the Dylan Holy Experience. We are going to hand scour the internet to make sure we deliver you the best, most important news about what's going on. And with that, I think that we can move into probably our most hot button topic. There are multiple events that are surrounding this topic, but probably the single biggest piece of news that's come out for the banking industry since basically the collapse of Lehman Brothers, and that is all of these bank failures. Oh man, Credit Suisse to borrow up to about $54 billion from Swiss National Bank. Okay, let's just talk about First Republic Bank a little bit. It is a regional bank. They got an additional $70 billion in funding from JP Morgan and the Federal Reserve to meet deposit demands. But I want to talk more about Credit Suisse. So here's what's going on. Credit Suisse finds material weakness in its financial reporting process. The material weakness includes, but is not limited to, higher withdrawal rates, non-renewal of maturing time deposits, so CDs, and net asset outflows. The Credit Suisse's biggest backer, Saudi National Bank, will not provide any further financial support. Trading of Credit Suisse was halted several times in today's session, but it is reopened for trading now, and it dropped 24% to a new all-time low in the trading session today. Now, that being said, Credit Suisse is about to borrow up to $54 billion from the Swiss National Bank. Credit Suisse announced it will be borrowing up to 50 billion Swiss francs, $53.68 billion from the Swiss National Bank under a covered loan facility and a short-term liquidity facility. Let's actually, you know what? To the millions right now. We are going to live tweet this to the millions right now as we speak. Let's do it right here. Let's make this right here for you. Here is how the sausage is made, baby. So, breaking. At Credit Suisse to take near 54. Sorry, I know this isn't the most interesting stuff, but you guys get to see how the sausage is made, baby. To take near $54 billion bailout from at Swiss National Bank. Where's the Swiss? Give me the Swiss National Bank Twitter. Swiss National Bank Twitter. Man, yeah, but Credit Suisse has been kind of getting knocked out pretty hard. Okay. From Swiss. Let's see, breaking news. In addition, the bank is making a cash tender offer in relation to 10 US dollar denominated senior debt securities for an aggregate consideration of up to $2.5 billion, as well as a separate offer to 4 denominated senior debt securities for up to an aggregate 500 million euros, the company said. So let's take a look here. Deal includes $50 billion. It's 50 billion franc. 50 billion Swiss franc bailout from at Swiss National Bank _BNS. Then we take this. Oh, dude, everyone's like, dude, he's silent. But like, bro, y'all are seeing how the sausage is made right here. $56 billion. We'll take this, and then we're going to throw a picture of Swiss National Bank on there. Oh, we're going to definitely source the Economic Times on this, as we always do on the Dylan Holy Experience. Can we just paste it? Nice. CSG, add description, source the Economic Times. And just like that, Dylan Holy Experience gives you breaking news. Look at that, baby. Look at that. Breaking at Credit Suisse to take near $54 billion bailout from Swiss National Bank. The deal includes 50 billion Swiss, 53.68 billion. Oh, undo for 1 second. Grammatical error. Frank bailout from at. Boom, baby! That's what's up. That's how the sausage is made, baby. That is how we hand scour the internet, giving you news for the Dylan Holy Experience. Also, for all breaking news, at Real Dylan Holy on Twitter. And we were talking about what was going on with with the Swiss National Bank and Credit Suisse. So yeah, I guess they're taking a bailout of 50 billion Swiss francs, worth almost $54 billion from the Swiss National Bank, basically their Federal Reserve. And it will support Credit Suisse's core business and clients as Credit Suisse takes necessary steps to create a simpler, more focused bank built around client needs. Yeah, they dropped 24% today. They were worth $288. And obviously this is on the Swiss exchange, but now they're worth $1.70. Down over 99% from 2000, since 1999. If we take a look at 2007, they went from $76. They're down to $1.70 today. I think that this is probably going to impact the news, and I think that this is probably going to impact its stock price. I think we're probably going to see a jump upward. But trading was halted today, and it did hit a new 52-week low today. Now, I saw this article, and I was speaking to someone about this a little earlier in the day, and they were saying that Bitcoin was to blame for the failures of Silicon Valley Bank and Signature Bank. And I just wanted to talk about that for a little bit. So experts call cryptocurrency actually a bystander in the Silicon Valley Bank and Signature Bank collapses. In the wake of last year's collapse of cryptocurrency exchange FTX, the collapse this week of Silicon Valley Bank, representing the second and third largest bank failures in U.S. history, has renewed lingering questions about what role cryptocurrency is playing in financial sector failures. Signature Bank, which is known for dealing in cryptocurrency, came under fire last year during the collapse of FTX and crypto hedge fund Alameda Research. At Silicon Valley Bank, which is known for serving the tech and startup industries since its founding 40 years ago, the withdrawal of large cryptocurrency deposits added to the fear fueling the bank run that ended in the bank's collapse on Friday. However, experts told ABC News that cryptocurrency did not play a leading role in the bank's failures, although the collapses will have ramifications in the cryptocurrency sector. Now, in terms of the experts that they sourced, let's take a little gander. Quote, "I don't think crypto has much of a role," said David Yermak, professor of finance at NYU Stern School of Business. Quote, "Crypto is more or less a bystander in all of this, just like all the other companies who had deposited money." Now, the example that I like to draw in terms of why saying that cryptocurrency and Bitcoin specifically led to the collapse of Signature Bank and Silicon Valley Bank, let's take a look at the single largest collapse, bank collapse in U.S. history. And that's Lehman Brothers. Now, here's what's going on with Lehman Brothers. What they ended up doing is they took client money, they took customer deposited funds, user funds in terms of FTX stuff, in terms of FTX verbiage. They took user funds and people's deposit money, either it be personal or corporation or business type entity. They took that money and they over-levered. They got over-leveraged, and what did they buy? What did Lehman Brothers invest into? And they invested into mortgage-backed securities by the time the mid-2000s had rolled around. And basically, there was that housing boom. And then it led to an overabundance of mortgage-backed securities and collateral debt obligations, which is basically like an index fund for these companies. And they're basically financial instruments that hold people's loans, and the whole value proposition behind them is those people are going to pay that money back. Well, when the default rate skyrockets, people have no money, they get laid off, and they're already over-levered in terms of having basically an insane paycheck-to-paycheck lifestyle where everything is financed. They default on the loans. Now, my question is, when we take a look at banks, which, by the way, these banks did not really invest into cryptocurrencies. What they did was they took United States dollars and they levered that out, and then they took Bitcoin and other cryptocurrency deposits and levered that out. That's not necessarily Bitcoin's fault, that they were reckless and got over-levered with funds. Now, yes, Bitcoin is more volatile. Yes, from a monetary United States dollar standpoint, Bitcoin is more volatile. But the real estate market stalled. The S&P 500 fell 20% last year. And they have way more exposure to the real estate market and the S&P 500 than I think they did Bitcoin. Now, with Lehman Brothers, they were not only in mortgage-backed securities, but what most of these other banks did, if we take a further look down here, bada boom, bada bing. Uno momento, por favor. Uno momento. Uno momento. So, what they ended up doing was they, and this is mostly due to deregulation as well during the Trump era, and I think that type of deregulation definitely led to part of this nightmare. But they basically took people's money and cash that has been deposited at their financial institution. They invested into treasury bonds, which are typically very safe. But because there was a change in interest rates in the last year or so, those bonds lost value under the new accounting rules, the banks could still mark them at being in profit. Basically, for every dollar that they had invested into them, they could count them as 100 cents. So they could count. So they actually, on paper, didn't have to say that they lost money, even though the bonds were revalued. So with this, I pose the question to those saying, well, just them holding Bitcoin, not actually like really investing into Bitcoin, and more specifically investing into mortgage-backed securities or U.S. Treasury bonds. If there was a bank failure and they own Treasury bonds, should we ban Treasury bonds? Are Treasury bonds to blame that a bank mismanaged their money? No. It's not on Treasury bonds, just in the same way it is not on Bitcoin. The responsibility and the burden falls on the institution upon which failed and mismanaged the money. That's how this works. Now, that being said, anyone who does want to say that Bitcoin led to the failure of these banks, and after all of this, still wants to make that argument, I don't know what else to tell you. Except that you are crazy and deranged and frankly live in an insane world. Now, let's move on to some other further pieces of news. Let's take a wee gander here. I have to pull it over because I wanted that to seem like that was the last thing. But we actually have more. So Tyson Foods is planning to lay off 1,700 workers and close 2 chicken plants. Tyson Foods will close 2 chicken plants in May as a part of a plan to strengthen its poultry business. In its latest quarter, the meat giant said its chicken business underperformed expectations. Other food suppliers, PepsiCo and Beyond Meat, have laid off workers in recent months to cut costs. Meta is going to lay off an additional 10,000 employees after the initial 11,000 employee cuts in November. Mark Zuckerberg has pitched 2023 as Meta's year of efficiency. The CEO previously told analysts Meta plans on cutting projects that aren't performing or may no longer be crucial, while simultaneously removing layers of middle management to make decisions faster. He's getting rid of the bloat. I don't really have anything against tech companies for the sake of being tech companies, except Meta. Meta sucks because they take people's private information and they sell to third parties. That's how they make money. So fuck Meta. But I don't think there's anything wrong with tech companies that sell people a product to sell that product and people use or buy that product. But the issue is tech companies were extremely overvalued and bloated. So, yeah, it sucks that 10,000 employees are getting laid off. And it's probably 10,000 really talented people. And obviously, the Dylan Holy Experience wishes them the best of luck in all their future endeavors. Listen, y'all have STEM jobs. Y'all are going to be good. But the issue is that they were all bloated. And now they're losing some of that bloat. It's going to be the year of efficiency, as Mark Zuckerberg stated. And I don't think that's a bad call. I think they should probably streamline and get rid of some of that bloat. But that's all I have to say about that. Meta is up 2.3% on the news, beating basically the entire market today. And then up another 1.92% after that. So basically up like 4.2%. Over the last 24 hours, which is pretty awesome. Now, lastly, this all happened Monday, and no one really talked about it. But the Biden Interior has approved the Willow Project, an $8 billion plan from ConocoPhillips that over 30 years will generate just about 600 million barrels of oil. And there's going to be a bunch of, metric tons of carbon emissions too, according to the estimates from the U.S. Department of the Interior. ConocoPhillips will be allowed to develop 3 well pads within the National Petroleum Reserve in Alaska, a 23 million acre area that is the largest expanse of public land in the United States. Now, this is the single biggest use and extraction of oil on federal land ever. And of course, at Real Dylan Holy, the Dylan Holy Experience covered it first and in the most detail, frankly, because there we go, baby. Yeah, so it's the largest oil expansion ever, an $8 billion endeavor on federal land. It is the largest extraction on federal land of petroleum in history, and it will produce over 600 million barrels of crude over 30 years. And this all happened Monday when they were talking about bank failures. Now, in terms of the actual size of this, look at how much petrol. This is an entirely rich petroleum field, and they're only using this much. Now, it doesn't matter if I think that the use of petroleum is good or bad for the environment. Not really, because they're going to be drilling this oil, and they're probably going to use this entire field to drill oil. I think this is fine. I mean, as a Chevron and Exxon shareholder, I'm cool with it because I'm probably going to keep making money, And obviously, this is ConocoPhillips, but they're going to start they're going to start opening this up. Come on now. Let's be serious. But there we go. That is the Dylan Holy Experience, the midweek market recap specifically. Half of y'all are watching over on YouTube at youtube.com/@DylanHoly. Be sure to give me a subscribe over there, and twitch.tv/RealDMH. Feel free to follow me. We don't have a subscription set up yet because we are still coming at you live with under 25 followers, but there are 23 followers, so be sure to give me a follow. And I will be live every single Wednesday, and of course in between with some gaming stuff. Destiny 2's been on my top playlist recently, so I've been doing that. And I also do the midweek and end of the week market recaps. So twitch.tv/RealDMH, youtube.com/@DylanHoly, and where all the magic happens, Twitter @RealDylanHoly. I'm giving y'all y'all literally saw me on stream today deliver breaking news about Credit Suisse taking a near $54 billion bailout from Swiss National Bank. I also let y'all know whenever I am live to the millions with the midweek market recap. I give y'all like a 30-minute heads up. I also do key takeaways. Every single day the market is open, the Dylan Holy Experience is open, giving you the most important pieces hand parsed. The most important pieces of news on that day, and I give it to you in less than 61 seconds. I also just give you news shouts throughout the day, and I let you all know how the indexes are doing, the S&P 500 and the Dow Jones via our market moves announcement. And boom, there we go. Midweek market recap. Thank you all for watching. It's much appreciated, giving me 30 minutes of your time. I love it, and I love y'all. Thank you all. Have a good night.